Okay, so I tried to listen to the no nonsense forex guy this morning about his indicators and then how he's built this algorithm and he's not shown it to nobody. No how, no way. I just think that it's kind of odd how it's such a this world of indicators versus price structure is kind of funny how people want to have that nice soft suspension on the car, the indicators. And the guy this morning that was commenting about the 1% risk to make 3% because he bought in this slamming bullish candle, which was like right at the borderline of the market. And it just ran after that. And so he got in on this confirmation trade. And I just thought, I wonder how much. I wonder how tight his stop was because he said he was risking 1% of his account, which would totally make the stop a different kind of stop. So I think if you put a structure stop in other words, a volatility that's happening around the neighborhood where you're at, the last three bars, the last bar, that volatility kind of matters. So if you have a forward chart and the market's really quiet, you kind of have to expand your targets if you're going to get in on these breakouts before the market goes into a trend. But if 70% of the market's ranging, then even the range traders are making money on the move, right? So the market goes up. If it goes sideways, even for 4 bars, that's 12 hours of or 16 hours of trading from a very shallow range. But in a dramatic range, which would be swing trading, I suppose, you're going to hold the trade for 3 days and go back and forth, up and down. And it's kind of odd that the filter system that No Nonsense built has such a rare entry. He's just waiting for these premium setups, I suppose, on some indicator system. I just don't think I could live like that. I just don't feel comfortable creating a painting and creating just this kind of canned, we call it black box in the old days, and just leaning on some algorithm. Like, it just seems so much easier to see that if you were to place your orders at unique places where there is the hot spot and you could discover that spot, you would just place your orders there. As opposed to this kind of, I guess the cloud trading system is a prime example of a indicator gone too far and away. I mean, you've got a front, in other words, offset to the future, kind of the way MetaTrader's robots will do. They'll take a moving average and plot it into the future. Then you got stuff into the past. So you're trying to create a moving average crossover system by shifting forward and shifting back. Moving averages to force the crossover. And to have these clouds and all these things, it's kind of funny. There are people making money, though, with the cloud trading, and I can see why, because they're not over trading. And if they have even a 1% risk, and I don't know how much money is in his account, but 1% to make 2%, I got it. You're making triple your money, I suppose, on some in that aspect. But I think the real unique thing about it is that it took this guy, I don't know how long for this setup to occur. So in the meantime, I feel like I'm losing money. Like if I'm waiting 3 weeks for an entry, I feel like I might get hit by a train by the time the trade comes up. So for me, I want to be able to look at the market. I go, the market's open. Hey, is there a trade out there? I just feel like I want to get into something in the next 3 hours and the next day. At the end of the day, I'll get in. In the morning, I'll get in. When they stop hunting in the morning, I'll get in. See if I can pick something up for some type of psycho auction. There's always some fucking crazy auction going on where they're just driving the fuck out. They're either ripping it up or ripping it down. And I like that trade where the market's moving and I know, okay, well, I'm either going to jump on this train or I'm going to get in on the opposite side. So I'm going to be the so-called smart money, I guess. Another thing is that sentiment indicators and all this stuff, even though No Nonsense Forex guy will tell you cannot fade the sentiment goobers. Because by the time you look at that data, that's fucking, But it's so stupid to think like that. Like it's how somehow that, oh, well, I'm going against this guy, so he always loses. Well, you know what? He may not be trading the same size and time frame. And I even saw this Bob Booker guy who is a trader that one of these guys was watching. And he says he put on an options trade that cost him, he was risking $400 and he ended up only making $33. And he's like, yeah, you know what? I don't have to worry about that trade. So if you are going to do that, and I did that once one morning to prove it, that I could go the whole morning without a losing trade, and I made like, I don't know, $3,000 or something. Just because if I was up $3 and I saw the market was about to go against me, I got the fuck out. So I had a hit rate of 100%. So it's a completely different way of trading than saying, oh, well, I'm going to get in here with I'm only going to trade once a month and wait for the premium setup, moving averages crossover, and wait for my indicators to catch up too, which means you're really waiting for the delta, right? If your indicators are going to catch up, it just would. And of course, when I go on these rants, I realize some people haven't watched the market long enough to get a sense that it can go up and down in an erratic. Okay, volatility is going to be the problem. Like, is it screaming up or is it just kind of drifting? And is it spiking down or is it just kind of melting? And is there a shelf that it's about to hit? Like, as soon as you get to like a fresh low of the day, and it's the low of the month and the low of the year, it's the low of 10 years. Just take a look at any chart where the market has made a 10 or 13-year low and then it starts to creep into that zone. It's pretty scary. I mean, why do you think the Swiss franc fell apart so hard when they unpegged it? Because it was like, oh my God, people have stops. And so this guy here seems rational. It's funny. You can't dislike or like this video. It was done like a couple of years ago. Learn a simple range trading strategy, part 1. So, this was done like 3 years ago. But this guy seems to be very concise. I like what he's saying. I think he's rational. I don't think there's hocus pocus here, although I point out what I see as far as it's almost like he's looking at too broad a view. I always feel like it's 40 candles, and people say, well, it's a triple top. 40 candles. Yeah, no, every 18 candles, there's a swing high. But what about on the way to that thing? Jesus Christ. I mean, it's a daily chart. I mean, are you really going to wait for the market to retest? I mean, you're either going to get on the train and ride it to the retest. But then I'm just thinking about, like, what am I going to do this week? What am I going to wait 5 more days for my indicators to catch up to? Well, maybe you are. So maybe that's the problem. I don't have the patience to, and I don't think anybody, well, maybe if you're 10 years old, but I don't think I'm live long enough to really wait for these setups that people are talking about. Hey, and then if it comes up, we'll wait till it's really going up and then we'll get in. I'm like, oh, God, should we just get in now? Well, no. Let's wait for confirmation. We're waiting for a blood test to come back. But this guy describes it very cleanly. Even better intro music. Day trading strategy since 1996.
Now, it's been said that a market only trends 30% of the time. Now, I can't quantify that figure, but having a range trading strategy to take advantage of the other 70%, it's...
Now, this is totally the whole reason you want to range trade it. And you can just put in orders 15 pips deep for 15 minutes, and that's a pip a minute. You're expecting the market's momentum to be a pip a minute. And if it doesn't make it, then you're not going to take that trade because that order is going to delete itself. 15 pips deep for 15 minutes, 30 pips deep for 30 minutes. That's a pip a minute. The market can move a pip a minute, maybe not straight down, but over the period of the day, right? So that's 1,400 pips a day. One direction. Of course, let's figure it's going to be, we'll say, wait, no, that's, if we go an hour, every hour, it's going to drop 10 pips. So that's 240 pips a day. And that rate of change there is, oh, is that possible? Okay. Well, if you're going to get into a plunging market, and it doesn't matter, kind of, this guy actually describes a random line thing that, yeah, it's gonna hit some of these lines. I mean, somebody said, I can't believe you're not using Fibonacci, but I would use Fibonacci, but just for the ratio, just to say I'm gonna risk 38% to make 62%. In those terms, yeah, this is the Tony Plummer thing, is that his fib is 4.618 or 4618. So he's saying 4 times. That's his, in this book, Forecasting Markets, $50, red book. He's talking about, his expansion on the gilt British debt instruments, the bond market, the gilt, I guess calling it guilty. And that thing expansion is 4 times. I'm like, that's insane. Now that is like, boom, spike, it's over. Or it's going to get there in some trend manner. But this 30%, man, I mean, what this is why when I'm triggered when the no nonsense Forex guy says we are trend traders, people. I mean, this is like triumphantly marching into Gooberland. We're trend traders, and we don't trade reversals because we get burned on that. Yeah, because you don't know how, or apparently you're just putting a buy stop, or you know what you're doing. This is why he's getting killed on reversals, because he buys after it goes up, right? So he ends up getting caught in the range trade. I mean, it's painfully obvious. I hope to anybody that watches No Nonsense Forex Guy, what happened to this guy? He was abused by the market because he bought in confirmation and they whipsawed his fucking nuts off. So he decided to get indicators. I mean, it's just so sad, You're like, oh, how sad that's how it's going to be. Yeah, he's got a self-driving car now because he can't fucking think this. He can't see the forest for the trees. Because his confirmation is to, and one of his students there made money on the Australia, New Zealand, because it spiked up in March 25th or something. But so funny. It was when I tried to trend trade when I was a kid, back when I thought it was possible, and I bought fucking shit called Swing. I had a program called Swing Trader by Pardo Corporation. This is like 1985, 86. 3.5-inch floppy. It's $2,000 for the fucking code. Okay, $2,000. Tweakable end of day data, and it's giving me signals. And the swing trader, I don't know, that's kind of range trader, I guess. I spent so much money on this shit. So that's another reason I got triggered. I see this guy saying, oh, just do this is my algorithm. I'm like, okay, man, you know what? I really, seriously, I mean, why bother? Why does he bother? I give away everything I've ever learned for free because I don't really care. I mean, nobody else cares. Only people watching, like people I know in real life. If I told them this shit, they'd fall asleep in fucking 48 seconds. I mean, I could put people to sleep. I just had to stop talking about it in public. So only on YouTube can you find an audience of people that would even understand what you're referring to. Because, if I wanted to play guitar somewhere in public, that's not really even socially acceptable in some places. But, some things are definitely not socially acceptable. But, going to the restaurant talking about how the weather sucks dick or something, or how you stubbed your toe, that's a completely acceptable chat. But when you're talking about, geez, I don't know, how do you feel about when the market's just ripping in one direction and you're not aboard it? I mean, is it worse than being in it and being on the wrong side? Like, what's worse? I don't know. It's like, I get hit by a truck. It's like the old thing, would you rather freeze to death or would you rather burn to death? I don't know. I think I freeze to death. I could just take a nap and go, I'm just going to sleep it off. I'm going to wake up dead. Burned, I don't know. I think a lot of people, if the market takes off without them, they're like, okay, I see. Yeah. Next time I'll get aboard that one. If they goes against them, they're like, holy shit, but maybe they don't say, how could I have got on the other side of that, or how could I non-directionally traded that and not had to worry about whether I chose a direction? Let the market choose. So this is kind of a nice, concise, of course I'm dragging it out, the 9-minute, 11-second explanation of range trading here.
It's pretty good business. Now, range trading,
it's a pretty good business trading. 70% of the time you've got a deal going. You know, I mean, this is all great until the trend kicks in, of course, right? But then this is why God invented stops.
70%. It's pretty good business. Now, range trading, it's not difficult. However, it does require discipline and a method of determining when a trading range is in play. So what's range trading? When a market is trending, you're going to see a stair-stepping pattern of higher highs and higher lows in the case of an uptrend. There's an imbalance of buyers and sellers, and you can
see, at this point, I think the trade plan at this point, if you think you're in a trend, is to buy on shallow limits and buy at the market. If it comes back in a shallow manner, you're buying heavy with a tight stop, because you really are counting on this thing's leaving the gate, okay? So when a trend does happen, you got to start entering on the dojis. You have a tight risk here. Forget 1% of your account. You just have to pick a fucking dollar amount. 1% is too fucking much, honestly. Okay, it's like I'm risking 0.001% of my account per trigger pull. So for me, I might buy every 5 minutes this thing's coming back at the market, and I've also got limits that are down there, and then I got limits that are low, and then I'm like, okay, you know what? If they stop me out of that shit and it goes into range mode, I got a pack of orders down at the bottom that last all week. And they're going to pick those tickets up. I'm going to pick something up. I'm either going to be in about 10K or about 200K, but they're all single tickets. Okay, now it may sound impossible, but it's not. Trust me, you're laying in bed, you got a tablet, you can hit that button, boom, boom. You could write a script that literally lays in 80K. Well, maybe you don't want to do that to your broker, but all I got to do is hit that thing 10 times, and I got 100K going. 10 tickets on each script, or a drop like that. Bam, 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 and that's not going to choke them. Trade 100K, scatter. I may only get filled on 78K. Then I can rinse and repeat. I can dump it. We're coming back. I'm going to get in again. I'm range trading even the trend. Okay, and something's got to come off the table there. It's all pre-programmed though. Another thing I'm doing, which is, it has to do just with pure execution. I'm never going to say, look, it's oversold, let's buy. Let's put it at 1% or a 0.5% risk. It just doesn't make sense. The market's telling me how much to risk by how much it moved. If it pulls back a little bit, I'm like, oh God, fuck, we can get a nice tight stop here. And we can get in, it's barely down, so we can do the low volatility orders, and we could still run a bank of trailing limits in case it's just going to keep pulling back. We don't know, you know. If you think there's a trend for whatever reason, maybe you're okay. I mean, when this market cuts through the vacuum, it's going to be so quick and dirty. You're going to have to probably dump. Hopefully, you're scaling out automatically predetermined. Each script's unique, and you're getting out because you ain't going to have time to. It's in a flash of an eye. This thing will go up to a zone, to a vacuum, and then fly back. Happens all the time. It's happened in every currency today across the board. British pound, euro, dollar, everything spiked and retraced. Okay? And for whatever reason, I don't even know. I don't know what else, maybe it was news. But you just look across the board, you'll see a vicious spike in every market. It's just like, okay, that's just the market is. It just had to rebalance itself.
Generally see the difference between an impulse move and a corrective move. Impulse moves are stronger and bigger in scope than a corrective move. Now, once that condition stops, markets tend to find themselves stuck between a high and a low and continue to oscillate between these two.
We also have to assume it's stopping. Every time it goes sideways, this could be it. We can't do any confirmation stuff because Mother Nature really doesn't let you do too much confirmation. If you wait for too much confirmation, it's over. You're gonna be sideways if you're finally we're in an uptrend. I mean, I've done this a million times. I've looked at it and said, Can I trust this moving average now? It's so late in the trend, and I'm like, okay, look, it still is fucking going up. So it doesn't answer the question, how can you kind of slightly hedge this? So if it does keep going up, you're like, oh, I guess I got to fucking buy this thing. I got to abandon my sell thing. But if you have sell limits that are way up in some shelf based on a past void, that is your sell plan. You're prepared to sell up there, but I guess it takes, you have to imagine that we're going to get there fast, go screaming into that zone, and then, what's going to happen? Are you going to just ride it to there and then ride it back? Pretty hard for people to do that. The people I see that are not willing to throw a couple tickets up there to see if it works, to feel it happen, because you're just not going to believe that you could trade zones instead of exact prices. You just don't believe it, because I guess this indicator thing, people say, well, when I see my speedometer in my car get to 60, I know I'm going the speed limit. But the markets aren't like that. The speed limit's changing all the time. So you have to know, okay, this is what the traffic's doing now. I'm in the flow of traffic, and I can turn on a dime. You got to be, I don't know, man. You got to manage how you're going to get in and out of the market, because even if you're right about the direction, and you put too tight a stop in, you're in too heavy, they're just going to bounce you out, Once you see where the market's going, this hole that it's kind of chasing after, and once it's satisfied, I guess you just have to, just go trade with the fucking no-nonsense Forex guy.
2 points. Buyers and sellers have found a point of relative equilibrium, and you can find yourself in a very choppy trading environment if attempting to trade between the two extremes. Now, this is when traders will place trades against the high or low extremes, and will continue doing that until a price breaks out of either side. So we just come to the first issue with range trading, and that's finding the 2 points that are going to act as potential support and resistance levels to trade against. Now, I did a piece on support and resistance a while back, and I blanked out the chart, and I randomly laid on some horizontal lines. Turning the price bars back on, price did find support and resistance on every single line. Of course, that does not discount the validity of support and resistance, but it does bring home the fact that price can and will bounce seemingly from a random level on the chart. Now, to ensure you're using a level that may have some importance, levels that are obvious would be a better place to watch for price action and potential trading opportunities.
So obvious levels to me is the most recent highs and lows. From one bar back to the deeper areas where it is like a triple top across 40 bars. But the most critical one is the one that is nearest price right now, because we're either going to break out and start cutting away those tickets, those stops, or we're going to go the other way and start cutting into that, because we can't go sideways forever.
Now, this instrument, it's trending down, and it puts in an obvious low at number 1. For the downtrend to continue, you're going to need to see this low taken out to continue our pattern of lower highs and lower lows. Now, price rallies, and when the price starts to drop, we have our high at number 2. Now, the issue is you have a potential pivot at number 3, and is confirmed when the price at number 4 takes out the number 2 high. Now, has this market gone right from a downtrend to an uptrend? Pivot at number 3.
See, I don't even see this. I never would have thought to draw the lines where he drew them. I don't even know what the fuck he's talking about. I think he's talking about this is the beginning of an uptrend with 3. And people are thinking, okay, we're going to get on here and we're going to ride it up, but it doesn't go past this, it comes down. The way I see it is, with whatever time frame this is, here you could put on a hedge. Or you could say, I'm going to buy or I'm going to sell. But I would hedge it. So if you had to trade every bar here. Plus I bought very lightly mean, about a very tight stop. And also, this is the smallest bar. And they're expecting some kind of move like this. So, bar by bar here, they're trapping, it's filling this little mini void here. It's satisfied. This is a small bar. Here's your triangle. Your flags forming here. There's a void here to be crushed. Do you get in and ride through the vacuum? You could. You could get in before the first low is taken out. This is taken out. This is a stop run. Or this is going to help fuel it. If we're going to start buying on limits here and then buy at the market, then we're done buying that. We wait. It starts to clean these stops. We're going to sell here. We're going to get out. We're going to sell on this top. And we're going to sell on that top. And we could ride some of it back. If we go stop hunt to stop hunt, we got trailing buy limits to buy this guy's stop, buy this guy's, ride it to here. Then we have our sell stops, sell limits here to capture the fake breakouts. Then our buy limits, because this hole left behind, we're anticipating that to get filled. So if we're not buying, okay, so the way I do it is I'm going to buy on limits here and limits here, because I'm not going to buy this limit. And if I did, I'd have a pretty tight stop. And this is the limit that's going to be, say, like this one, where I get picked up here for the hot ride, or picked up on a limit. So trailing limits here. The bars are too big to run stop to breakouts. So if it's a small bar, I have a sell stop and a buy stop maybe, or buy stop, sell stop. And I'll let the market decide. Buy stop, sell stop. If it's a big bar, this is a big bar down. I can only get in on limits, see? Because I'm expecting some whipsaw action. Like here I could put sell stop, buy stop, I'm trapped there. Here that's not too small a bar. Here's a good small bar is a trend entry. Like here is this buy stop, sell stop. Yeah, so you got whipsaw there. You can't, and of course, it does no good to just trade one style stop entry here. I don't know what time frame this is, but let's just whatever. If we sell at the market because I'm sorry, these green bars are up. We sell at the market here because it's overbought, compared to the last. I'm just looking at the last move. It's up. Plus we have sell limits here. If we're trying to stop hunt the bears, protection, right? And then we have low volatility breakout, boom. This is a classic trade here. You don't need a bunch. People say they trade price action, but I don't think they really do. They say it. But see this top here? This little void left behind? Market wants that. It always wants it. Look how it wants that price. It just wants to wick that out. But it's like, oh, I put a buy stop there and got faked out. No, your buy stop should have been down here before this vacuum filled. See, I'm looking at these holes. I'm not seeing necessarily this. I mean, I do see this giant hole. And this giant hole. And he's got these things like, holy shit. I'm just thinking about, there's got to be buy pressure sitting here. And look at, we went here at some point. And look at that. Look at this sell window. They just jump out at you. See this buy window here? This low here. They stop hunted that, right? After this vacuum filled, there's so much shit going on in this goddamn chart. I don't know. I just don't see how. Am I the only one seeing this shit? On a big bar, you're trading limits, right? Stop hunts. On small bars, you're trading breakout. Now, here is a pristine entry. Sell stop, buy stop. Market fills you. Very tight, low pip risk even. You can size a ticket to make it make sense. And I'd say this is the only small bar here, regardless of the fact that it is, a down bar. It's not a spinning top or a Great. So a lot of sideways action here, but once again, look at this buy limit action. Oh my God, it's so stupid. Doesn't that look like a good trade? You put a buy limit here. Well, wait, you got confirmation. Go to white. The confirmation is they filled your fucking ticket and they didn't stop your stop out. And you could have got out here. You could have got out there. Same thing here, well, here, 2 bars back, you got a sell limit right here. You got a sell limit, even this one, a sell limit here with a stop here. This exists, right? So if you want to put your stop here where, there's some guy willing to sell that. It's kind of like who's hunting who, Who's hunting who? Are you the hunted or the hunter? And this is constantly changing. This thing with the big banks, it's just so fucking retarded. Well, the bankers are hunting the stop. No, you can hunt the stop just as well. What are you, stupid? You think the banks got their head up their ass? You honestly gonna tell me? You ever worked at a place? There's only like 10% of the people know what the fuck's going on, and they're in the lower echelon. Okay, the people at the top don't know what the fuck. Do you ever see the interview with the guy from Twitter? You know what the fuck's going on, dude. Why would he care? He's making so much fucking money. You think he fucking cares? He doesn't even know who's been he really doesn't. People can't believe that people at the top don't know what the fuck's going on. Well, of course they don't. They're driving their Mercedes or their fucking Rolls Royce. They don't know what the fuck's going on. You give people too much credit. And this guy with this fucking no nonsense Forex guy. What the fuck? Who is this guy? Well, 99. You don't want to be one of the popular kids, I guess. Not if you're a nerd. I never had the problem of wanting to be one of the popular kids. It's not been an issue. But I just see stop hunts all day long on this chart because I just remember the early days of learning how to trade. Well, you got to put a stop in down here. Oh, they sent me out. Well, I put a stop in here. I thought it was going up. Yeah, shit, I thought it was going down. So, I thought it was going down here. So I put a stop in here. Fucking stop me out. God damn it. I mean, these aren't really random levels here. I mean, sure, I could just go like this and blindly say, look, it found support. But no, where did it really find support? I can't believe this guy's not even talking about this on the chart. Like, dude, you get in here with limits. Okay, now this is the Lonely Wick thing. This is way back. This is like 8 candles ago. Well, it's turtle soup down here. Yeah, dude, that's a trade. How would you call something turtle soup? There's always a trade, damn it. I don't know. I just think there's always a trade. Look at all this shit going on here. This one, I think you got burned here if you put a buy stop, sell stop here. You know what? If you had see, this is the thing with these little baby bars is that this is a great trade from a scalping standpoint. You still got to be aware of this. You look 1 bar back and you're like, oh boy, there's all sorts of minefields here. It's just a minefield of stop hunts. But yeah, you got to be the stop hunter.
And is confirmed when the price at number 4 takes out the number 2 high. Now, has this market gone right from a downtrend to an uptrend? No. Now, you're going to see later that price does fall back and does take out the number 3 low, and you can clearly see that price is not in a trending pattern. You have the extremes of our range labeled as number 1 and number 2, but number 4 highlights an important fact about these levels. They're not a defined price. When you're looking at these turns, consider them to be a zone with a margin of error both outside and inside the range.
I don't know what he's talking about, but the wicks here, if you're looking at this, here, I'll look at a real chart. I don't know if his charts are real or not. But I have the infamous 100 pip grid up here. This is New Zealand yen, daily chart. Now, when this thing's ranging around the 100-yard line, I'm just going to give it a vague approximation here, but still there's a unique thing that's happening here is from a stop hunt standpoint. It's the only way to really describe it, because if you've ever put your stop in like a good goober, it's look at this this window here where you got this isolated spike, and we cut through that and we go beyond. We overshoot the runway because we want to go after this stop. Got to hunt that stop, right? Got to put the, this is just seems so obvious. I wish I would have thought of this a long time ago. But it didn't occur to me till people started talking about, oh, they hunted my stop, and I'm thinking, oh, I see. Yeah, I see what you mean. You mean to tell me you bought here? I think I get it. I think I get what you're saying now. So I'm sure this has happened to somebody, and not everybody's in the same losing trade. This whole idea, there's not long, not short. Okay, you know what? The order and balance. If people are buying into this thing, they may be swing trading it. They're not like buying. And besides, these dead cat bounces here are worth a few pips, like 50 pips. That's not bad money there. So when it takes this price out, just before that happened, that's what causes that. And look at this window. Okay. Now, when it goes sideways like that, who's making money? The breakout traders. Because they're like, oh my God, that's a daily chart of like 20 pips. I think it's probably Sunday night. Look at this, nothing. Coming in the beginning of the month, nothing. Just about to collapse into here. So it falls out of bed here, I think, Sunday, one of the Sunday nights here. It goes slamming down. From a breakout standpoint, the only places to get in are like here. Okay, if you just look at small bars, here's a breakout trade, breakout trade, breakout trade. This is not a breakout trade. The only way you can trade this is if it goes up, you're in an uptrend. Time to start running a trailing buy limit system if you think it's going up. Also, the same time to put a sell limit here and have the sell limit start getting tagged. Is it inching up there? The air's getting thin up here. Sell limit, sell limit, sell limit. It's still not a winning trade, because if you sold here and it went down here and you put a trailing stop in here, it's like, okay, well, you know what? You should have got out here because you can see this stop hunt, right? So it's hunt to hunt. We never make it to here, but we finally do. And when we do, we get a reaction from that, right? Why is the market turning on a dime there? It's turning on a dime because of this, right? Isn't it obvious? Why is it coming up here and clipping that and then coming down? It's not because, okay, when people draw their horizontal lines, I think it's silly what they're doing when they do it like this. Of course, if they draw it all the way across, like, so if you put a line in here, okay, God, that's a very tippy top, but the only other choice on this chart is this now. That is the bottom of the chart. I mean, if you mark this off, it's already come and gone through that. Besides, that one doesn't matter. This one matters. Right? This is the last known low. This is where everything fell apart. This is where I expect the market to come back to eventually, if it ever comes back. But before that, it's got to take out this high. It's got to cut to this window. It's got to take this out. It's got a lot of work to do. When the market was, okay, so there's so much going on here, because you see the breakout traders are getting in these small things and they're riding it, and this daily chart. If you could get in before that move, okay, if you can see this, that you want to get in here, it just looks so much easier than waiting for a stupid-ass fucking moving average to set you up. This void is such a big deal. Really? How is that not? Just look at the buy stops are stacking up. Pressure's building up. What's going to happen? Bam. And where does it run to here? Then it's done. We're done. Range traders come in. Breakout traders made money here. They never got stopped out. Buy stop, sell stop. Now here you can make the claim they got trapped, but if they got in these 2 days before this vacuum filled, before it filled this giant cavern, and it came down here and just went and wicked, it just wicked into this for a few pips for a dead cat bounce, almost made it back to here, not quite, but bam. Then here comes the ultimate crush. No reaction from this. We have to zoom out to see what's causing the reaction. So we expect this to be a huge buying window. They just wipe it out. Next area, from here down. Wow. Daily chart. So I'm sure on the 4-hour chart, you could have had a small... Okay, if the market's falling apart this fast, you need to go to the 4-hour chart. Otherwise, there's no entry here. I don't even see a small bar. You know, I don't think people, maybe they are used to this currency pair, but explain this to me. Okay, is this a trend? I'd say so. That's a daily chart. That's a trend. And then what? 80% of this bullshit? Yeah, 70, 30, 70. Pretty insane. My only approach to this market is just to keep buying 100 pips deep because it looks like it could go down there. And as far as selling it, I'd start selling it here above the... I'd say, well, this is daily chart, so I only need this much data to trade it. Like I can see this window here. Another put sell limits. So I'd be inclined to buy it here at the market at the end of yesterday, slightly down by quite a bit with a very tightish stops because now that we're trading sideways, we can run tighter trade plans. We can make more money out of the gate now. Right, so when it quiets down, we can really get in heavy. Now, when it's screaming down like this over here, and it's coming into this, and then they stop hunt this guy just by like 10 pips, and then it just, wow, rips up. I mean, that is a lot of money very quickly. Just like this one, high probability entry. But now I think we're down in some, I have to go to the weekly chart to really see the big picture here. This thing just fell out of bed here. So, a huge meltdown there, New Zealand. So Euro CAD, I mean, I could go through all these currency pairs. And it just looks so range traded. Doesn't this just look like a range to you? To me, can we go with that 70% of the market's trending, and you want to be a trend trader? I mean, 30% trending here. Like, look at this trend. I'd say there's a trend, the rest of it's just gibberish. Look at this. These are 250 pip moves out here. Incredible. Even this thing's ranging. I don't really think of this as a trend. I'm sure that some moving average was able to kind of roughly call this an uptrend. But if you didn't think this was a good trade or this sell or selling up here, I don't know. I guess I'm never going to be able to unsee it. That people are selling these tops as it comes ripping back, and then they're buying these bottoms. Right? They're buying low and they're selling high. And okay, yeah, I guess you could have bought here and you could have rode it to here. But isn't this guy making more money? Isn't this guy making more money by just saying, you know what, I'll just range trade that. Noise is my friend. You can make top bottom arguments here, but in the end, even if that's true, you still got to have a place to buy that. Look at this wick. Isn't that brutal? Ouch. I don't know. But yeah, range trading, I think, is something you need to think about. I guess that's the reason why it just can't. It just irks the shit out of me. This no nonsense indicator guy.
Range trading will take into account both extreme zones, and a trader will look to position a trade against the potential zones of support and resistance that form the range. Now, why potential support and resistance? Well, you don't know what's going to happen when the price returns to these extreme zones. It could stop, it could reverse, it could break out. These zones potentially have an effect on price, and keeping that word in mind will keep your expectations in check when confronted with the meeting of price and the zone. It will stop you from simply pushing the buttons and taking a trade, and it's going to force you to look for signs of what the probable move may be. Now, trading range equals consolidation.
I don't think you should look for signs. I think just put the goddamn orders in.
When trading trends, most people are used to the impulse and corrective swings in the market. These pullbacks and rallies are continuation patterns of the overall trend. Well, the same can be said about trading ranges. More often than not, a range is a price consolidation as part of the overall trend move. It certainly can be the ending of the current trend and a reversal is imminent, but that has to prove itself and just not be assumed.
Yeah, I don't think so. I want to assume it. I'm going to assume it because once the proof's there, the move's, you missed the entry, man.
Now, we all know there's 4 phases of market: accumulation, markup, distribution, and markdown. And it is possible that the consolidation you're looking at is either an accumulation or distribution. And let it prove itself to be a trend change or show a clue, such as a higher time frame divergence. But
no, it's too late by then. It's too late. Just assume. Just guess.
Assume that a continuation play if you're trading the smaller time frame. Now, ranges can also occur when the higher time frame becomes overextended, and the range is where that condition is being worked off. Now, the first chart showed a range on the daily chart that occurred after about 148 days of an overall downtrend in the market and 26
overall, but look at how rangy. That's very rangy. Look at all those great buys and sells in there. Oh my God.
7 days of an impulse leg that terminated at the number 1 low. Now, this chart here shows the weekly chart of the same point in time. You can see that the price had 2 weeks of a momentum push to the downside, and our indicator shows an oversold state. Our daily range played out for 63 days, but a quick look at the larger time frame showed an extended and oversold market. The higher highs, higher lows, lack of divergence, and a lack of reversal price action pointed towards a trend continuation.
Once again, if you're waiting, when you see divergence, you just got to jump on it. You know, you can't wait for the market to move from the divergence and say, oh, it looks like we had divergence back there about 5 bars ago. Let's get in here. What?
And not a reversal. There's risks of range trading. There's a few issues with trading the range, but many of them can be avoided if the trader is disciplined in the trading approach and knows what to look for. Having a read on price action will also go a long way in helping you take advantage of the opportunities that range trading provides. Now, it runs to the range extremes. Now, you've probably heard it said that the more time something is tested, the stronger it becomes. Look for multiple touches to confirm strength, is the quote. No. I go on the opposite premise that multiple runs to a level and actually weakens it, doesn't strengthen it. If a price level is...
That's debatable. Look at the chart here. I mean, I guess people have their bias about reality. Can I say that about anything here? I mean, you test it. I mean, this is a weekly chart. You can run to that area, you run to that area, test it, it held. But then you can make the same argument here. You run to the area, you tested, it broke through. Do you know when it's going to finally break through? Please tell me. Like, look, it's testing this, it's holding. It's testing that, it's holding. Well, this is the, see, I'm seeing this. There's this hole right there. That's the oldest hole on the chart there. Goes back further than this one, and this one's already filled. That void got filled, so it's the healing game. It just keeps going back and forth, trying to mend itself. That's all the market does.
It's important enough to reject price. Why should it continue to revisit that area multiple times? If it's going to revisit multiple times, I would also expect to see the move away getting stronger and not weaker to indicate strong interest at the extreme.
It's too late by then. This is all hindsight thinking. I'd prefer to see you do this before I do that. You know what? You ain't going to get that chance, buddy.
I also look at the number of times
reality doesn't treat you that good.
The traders take positions against the extreme and they place their stops just on the other side. If that breaks, especially in the direction of the higher time frame trend, a protective stop cascade could propel price hard, fast, and when those protective stop orders get hit and they turn to market orders, how much slippage is going to occur?
And what is that? When people say, well, all the goobers are in one direction, yeah, when their stops get hit, it's going to be a stop party, a stop hunt party, and you can ride the hunt or you can gobble the hunt.
The point is not to blindly take a position
Those are opposite trades. So what are you going to do about it?
simply because the price has moved to an area from the past, especially after multiple hits at the extreme. Remember that markets cycle through ranges and trends, so eventually one of the extremes is going to break. Now, if you want to fade the extremes, you want to see some type of failure or sign
No, you just put your ticket in and you just fade it, man.
of a reversal
What is this stuff? We're going to have to wait to make sure it's going the other way first.
at the extremes. Now, on the other side of the coin, you don't want to assume that you're going to have a trading range breakout simply because price moves strongly towards an extreme. This chart here shows
And there are people that will say that. There is no rule that the market can't do whatever the fuck it wants to do. It could go through that. It could turn around there. The way it gets there fast, I don't think it's a level as much as the void it filled and how quickly, in this one, I hope this is real data I'm looking at. It sure looks real. But look at this. This top here is so quickly, man, it just cuts into that. And it's done. It's coming back. And once it trips this wire and this wire, it doesn't trip this one. This is where my buy limits are sitting. Maybe I do have a buy limit here, but you know what? Here's where the big ones are. I'd have to leave a gap here because if I'm wrong, if this is, in other words, if I have a trailing buy limit here, of course this is a small bar, so this is more of a breakout strategy, this bar. But this one, say, I have a buy limit. And here I would say, well, the market's small, like when the market's small here, when the range is small, it's kind of breakout strategy stuff. Breakout strategy here. Breakout strategy here. Maybe here. Of course, they kind of trap me here if I do a very tight order. And here if I have buy limits, buy at the market, buy limits, buy limits. This one made money. No, this one finally made money to here. So with the right stop, right, that filled, it made money to here if it didn't stop out down here. But if I bought this one, I don't know if they quite filled that. I can't see on this guy's chart. Is that lower than this? No, maybe it's even. But I'm just not into this confirmation shit. It just pisses me off.
a range, and at number one, you can see the strength in the candle as price pushes towards a potential resistance area. You know people bought into this move, and the small upper shadow shows a very small number of sellers.
Some people did buy into that, but you know what? There are people selling into that. You know, there's whatever we call smart money. Here's another instance where people bought into this heavy here, and they got clipped. They got top ticked, right? Comes flying back. Then here comes the breakout, guys, right? Low volatility breakout, clean winner here. Too big of a pin bar, but if you're going to get into the market at the end of the session. So market orders I would execute at the end of a big bar. Big bar up, I sell. Big bar up, I sell. Small bars get stops, buy stops, and sell stops. And my limits are always going to be out in front of the market, maybe 6 hours out in front, 60 pips up. They're going to be trailing down here to capture this shit, this nonsense, just kind of like scattered in there. Maybe I pull the trigger twice. Maybe I go boom and then wait 5 minutes. If you watch the 4-hour chart and look at the clock on 5 minutes, or look at the 1-hour chart and look at the clock, and 5 minutes before and after the bottom top of the hour, you'll see dramatic moves. And you don't have to switch time frames. You can see, oh, you know what? Like, say right here, this is the bottom of the hour. This is a 1-hour chart. It's bobbing around here, and it's kind of they went. The auction's over. And it happened on a 5-minute structure or 15-minute structure. you don't have to switch time frame, and you can see the bigger picture. You're always looking at this big picture of like this zone here, like this also is a pivot. If we had a line chart, we'd probably have more emphasis on the fact that, I don't know if we see any tops, bottoms here, but obviously these are the pivots, the small open, the closes. Those are pivots. To me, in my mind, this is a pivot. We retest that pivot.
Just as strongly as price advanced, it collapsed. And once it was obvious that the range breakout was not going to happen, a large momentum candle shows up that could indicate the buyers exiting their positions. It could also indicate that those who bought at the small consolidation or at the support extremes are just taking their profits.
It could indicate, but this is the word indicator. Again, I'm triggered. I mean, it indicates. I don't give a fuck. It's look at it's already happened. Like, we have to assume the indication's coming like this. The indication is such a passive view of reality. We have an indication. No, dude, the guy's throwing up. Okay, he drank too much.
Regardless, anticipating their trading range breakout served up a healthy amount of losers. The price advances once again to the potential zone of resistance, and price action at number 2 shows the imbalance of sellers and buyers at the extreme that could be used for a trade entry.
It should be used for a trade entry. If you ever sell them at here and here, and you got in your trend trade here, your small breakout, you're riding up to here, also you're probably cashing out there. This is too big of a bar. But even the guy that had a buy limit here was able to scalp something. Isn't it funny? All this area here is just ripe for the picking, just like all this was. Just ripe for the picking. And this was even if you had a wide enough, if you started selling here all the way to here, you did pretty good, right? You sold that very top tick and didn't quite make it to here, though. But look at that window. Now, this is a smash down, drift up. It's not always, this is a smash down, drift up. And sometimes it is a smash up, drift down. This is almost equal balanced, big up, fast, down fast, that's like about the same.
Is a picture-perfect reversal, although it was not a strong continuation away. Now, you would not know any of that, of course, and that's why trade management must be part of a range trading strategy. Now, if you're looking to fade either extreme, this next chart shows a type of action you do not want to see. It's not a perfect example, but understanding what is happening is important. The extreme's been in place for quite a while, and it's seen multiple reversals in that area. The last one is different. The reversal on the left had signs of indecision until sellers took over. The last push up has consolidation right at the extreme, and there doesn't really appear to have much of a bull-bear battle taking place. You could also...
He's missing the cause for this move is the fact that you had this void forming here, and it's getting very quiet. And you have a top become a bottom here, and it's just a real classic wedge. And it's just getting very low volatility. And once they go after this, the initial fuel for this move has got to be this right here. Once they fill that, and then there is hardly a backfill. This is the only place to buy on a limit, and then it starts to go here, and people are like, holy shit. Once it hits this, yeah, there's people that sold that. I don't think they did very well because they kind of like, they could only get this out of it. This is too impending. And I guess this guy could have scalped to here, kind of came back to the tops become bottoms right on wicks there too. There's a lot going on there because you do have the bottom. In other words, if this is the stop hunt, when they're done hunting, just this area, then it comes after this area, and it doesn't. it's just such a back and forth game, right? Because people are selling into this window, and of course they make a few pips, but the whole overall story is getting very quiet. After this big up move that you sold at the market, right? So if it's big down, you buy at the market. Big down, you buy at the market. Big up, you sell at the market. So that was in market order, kind of binary, stupid ass trading. Buy, sell, right? It comes right back to the floor here. And all these little baby things are like, okay, are we going to put a breakout trade in here? Well, if you do, you're going to get whipsawed and chopped up here. If you're going to put in limit orders, instead of trading at the market, you put limit orders in here in this window and maybe here in this window. So here they would have crushed you out. But hopefully you were long from these and you got in. It's like the only kind of trend. This is the only one that you didn't get stopped out of. And I think this one. Nice clean breakout. And the next one is a very small bar entry. Stop entry here. Or at the market with a very tight stop. So you could sell at the market here with a wide stop and buy at the market here with a tight stop because it's a small bar. So you have to have trade plans for different size bars, which is a little more complicated, but pick like maybe 20, 40, 60, 80 bars, trade plans designed for an 80. If it goes beyond 80, okay, well, maybe you have some, maybe you're just going to run that and potentially get stopped out. I think if you have trade plans for each unique situation, whether it's, so if you have 3 buys and 3 sells, you got 3 buy stops. I mean, you got a buy stop, a buy limit, and a buy at the market. And how you size the stop on that depends on what bar you're going to trade off of and what is the volatility of pretty much the last bar. Because that's all we have is the last bar as far as what just happened. And it is the most important thing. But yeah, that's how I would approach it because it just makes sense. Maybe it doesn't make sense to you, but it makes sense to me.
To see part of the uptrend pattern of higher lows taking place. We don't want to see a pattern of higher lows into the resistance extreme nor lower highs into the support extremes. We do not want to see accumulation at either extreme. Now, while a reversal could still happen, this type of price action and structure at the extreme does not give much confidence for shorts or longs. If anything, some traders may find an entry inside of the consolidation at the failure test candle marked with an arrow.
Yeah, so I would opt for that. Inside the consolidation, if we build a position to the long side, every time it pulls back, you know what, we're just kind of getting in. It's like, oh boy, you know what, this is going to crack into that hole. It's trading sideways. Every hour it's down slightly or just sideways. I just keep on nailing the buy button with a different stop, maybe 8, 12 pips. I can run really tight stops when the market's quiet. When the market heats up, I'm hopefully out of the fucking thing, or I'm getting filled on limits that are scattered out there, or I'm just, forget it, right? Sell one at the market at the end of that session and have some limits up there, but, or just dump the whole fucking thing, right? If you've built the position alongside and it goes up 1 hour, 120 pips, you're probably going to get out if you haven't already had it predetermined that you were going to scale up because of the way you set up all those tickets.
Now, expanding trading ranges. When you see price break out of both extremes and failing to trend, plus each swing is larger than the previous, you get a range that's expanding. This is not something I want to take a part in, as the market has no clear-cut consensus on.
See, that is dangerous because if you don't see it goes flying up and then it comes flying back, you have to cut down the frequency of the trading because you have to wait for that thing to stop, for the hour to end, or the half minute, whatever time frame you're on. You have to wait for that to end before you hit the trigger. Because if you just, as it's going up, you just start sell along with it, you can overload that strategy. Any or that technique, any tactic like that can be overdone. You can put too many bullets in the gun and jam it, you know.
On what it wants to do. Also, if taking a position in this type of...
Oh boy, that was, I think he was going to put buy stop, and I think he was talking about whipsaw there. Anyways, that's the range traders, 70% of the market's ranging, so range traders.